How's it going, everyone? I'm going to re-record the introduction to order flow or tape reading, footprint charts, whatever you like to call it. Now, this is going to be for people who are absolutely new to this form of trading, unfamiliar with how to read it, the edge that it could provide, all that stuff. So it's going to be very, very elementary, and I'm going to try to take my time with it. So sorry if this video is longer, but I want to make sure everyone's foundation with this is as strong as possible. So let's talk about day trading. Generally most day traders are trading off of what? Lagging indicators like moving averages, trend lines, that sort of thing, right? And not only are these lagging indicators or like MACD or RSI, but they're subjective. Do you wait till your RSI is 70 or 75? Do you wait until you're extended on your 1 minute or your 5 minute or both? Or do you need a different time frame? Do you draw your trend lines from, sorry, I'm trying to get my pen, from wicks? Or do you draw it from the bodies of the candles? Now I know this is perfectly straight, but you get the point, right? It's very subjective. So easing into order flow trading, what it is and whatnot, one of the reasons why we use it, or why I use it at least, I'll speak for myself, is that it takes a lot of subjectivity out of your trading. You're trading off of, I don't know, a double bottom. Are you just trading off of a double bottom? Are you just trading off of a double bottom at the 200-day moving average? You're just trading off of a pattern. But when you're looking at the tape, reading the tape, you could see the transactions. Is someone actually buying here? Is someone actually selling here? And I don't want to go long. Using the tape, we could see this and be able to tell the difference. So some of the things we could identify and see on the tape. First one is the transacted volume, right? So let's take a look at transacted volume, what this looks like, what the footprint looks like. This is what I call the tape, the footprint charts. Now, this is a 5 minute for the E-mini, but I also use the 30 minute, the daily, the 4 hour, every single day. I know most people who trade candlesticks, well, especially day traders, are using, their 1 minute, 5 minute, and then maybe like a 60 minute and like a daily for their larger time frame analysis. This is just what I choose to use. You can have a 1 minute footprint chart if you'd like. For me, it's a little bit too much noise and you could get the full picture using other time frames, but whatever. So what are we looking at? What do these numbers mean? Now, I should say footprint charts are super, super customizable. So again, this is how I have mine configured. You look at someone else's, could be totally different. They could be not even looking at transacted volume. They could be looking at like the delta or something like that, which I do have on my footprint charts usually here, but not on this specific one. So these numbers, what do they mean? Let's get to the point. So I have volume by price on each candle. If you're unfamiliar with volume by price, you're probably not unfamiliar, or you're probably familiar with volume by time. So each candle does a certain amount of volume, right? And you'll see these little volume bars. Now, volume by price is the same thing, but it's volume not by time, but by price. So the more volume that's done here at 41.38, rather than bars, you call them nodes. More volume that's done at 41.38, the larger this node would be. Now, maybe 41.39 has a little bit less. 41.40 has like this, and you get the point, right? At each price level, the more transacted volume we have there, the larger these nodes are. And here I have that overlaid on the candles. So I have each volume node set to certain parameters on each of my time frames, and this is how much volume is transacted within this little bit, right? So volume by price overlaid on the candle. And so in this volume node, 55 contracts were sold. Whoa, not mean to do that, right? So this top node, 55 contracts were sold and 155 were bought. Now, someone who's new to this could be confused and say, well, there's more buying here. And if we actually look below us, there's 1,328 contracts bought and 1,000 60 contracts sold. Why, if there's so much buying up here, why didn't we continue up, right? And that goes into the second point that I'm going to bring into these footprint charts. I have this configured, right? This red is a selling imbalance. How is this a selling imbalance if we're buying more than we're selling? Well, you read you read my footprint charts diagonal. So we have 1,060 contracts sold under 155, not 55 bought by 155, right? So it's diagonal. It's not horizontal. Same thing down here. We have 4,016 contracts sold under 1328. Now, if we want to look at a buying imbalance, we have 3,331 contracts bought over 603. Now, I know if you're new to this, your head is spinning, and I'm sure some people already shut this video off, right? I hear it all the time that it's very overwhelming to someone who's new. I understand it, and this isn't the only tool I use. I use market profile charts to many. It's intimidating. It was intimidating to me when I first learned it. But they're very, very simple, and it becomes second nature rather quickly. So I know you're going to want to read it side by side, but it's diagonal is how this is configured. So again, take your time with this, and it will become second nature. So, and you're thinking, why do I even need this? Billy Bob Joe on StockTwits or Twitter is making $20 million a day just trading zero DTE options because of his trend lines or whatever. No, he's not. You go to any prop firm where you have professional day traders, they're not using technical analysis on how you see retail. They're looking where volume's being transacted, where do we have someone bidding the market, where do we have someone offering, and stuff like that when they're day trading. They're not looking at technical analysis stuff. So what else can we use this for? So now we know what these numbers mean, and again, it's going to take time. Just diagonal, not side by side. So a buying imbalance, I forgot to say, when we have more than 2 times as many contracts transacted over here, this will be a buying imbalance. So if we have at least 286, it would be a buying imbalance. We have 405, so of course it's a buying imbalance. Same thing in reverse. If we have at least 210 contracts sold over here, we'll have a selling imbalance, and of course we have 1060. So again, I'm not just using a 5-minute, I'm using different time frames, and here we could see where shorter time frame participants are positioning themselves. We see a bid down here, we see an offer up here, right? A whole bunch of selling imbalances, a whole bunch of buying imbalances. So this is a small bid, but if we're looking at like a 4-hour chart, we could see where a big bid is or a large accumulation of contracts are, right? Someone is happy to transact down there, someone's happy to buy down there. Now there's more nuance to it. Right, we're not trading just off the footprint. We have market auction theory that we use and TPO charts to help us visualize the market auction and whatnot. Trading's not as simple as seeing a buyer and going along with them. There's nuance to the tape when you're reading this in live time. But again, this is going to be an intro video. I have tons of webinars and stuff on the more nuanced topics and whatnot. So we could see aggressive participants when we're trading into an area, if there's a lot of buy orders going through, or if there's a lot of sell orders, each mean different things, and each mean different things in different locations. So that would be something like an aggressive participant. Sometimes you have low slamming shorts who get super aggressive, and if we pop over them, they would be the fuel for an up move. And the same thing in reverse if you have people buying breakouts. You could discern or identify what's a stop run and what's a breakout. So a lot of this is with the tape, and then some of it is also context of where we are in the auction, right? That's why we use these other tools to know what's going on, and we're not just trading off of price action in front of us. We have an understanding of what's going on in the market right now. So a stop run, this would be a breakdown, obviously not a breakout, but someone who's lesser informed could see a whole bunch of buying imbalances. Boom, we break down, or we see a stop run. Maybe they're like, oh, look at this B-shaped profile. with all these buyers down here. We have a buying imbalance at the lows. This is definitely stop run, go long, and then just get ran over. So without going into too much nuance and showing how we do it, just generally so you know the edge that this provides is you're able to see stop runs versus breakouts. I've went over it tons of times here on YouTube in some of my other videos if you want to check them out. But again, I'm just trying to make this as palatable as possible for someone who's newer to this. So I think we went over, we could see a bid or an offer if they're there. We could see trapping tape or the trapping of participants, I might say. So if we have a bid, we have an offer, we could see what trapping tape looks like. Looks something like this, right? But there's a reason it looks like this. I'm not just saying, here, this is what it looks like. All of these mean different things, and there's a reason for that. But again, that comes with learning how, the market mechanics kind of work. Soaking, absorbing, if we're selling a lot and just we're not moving down, well, someone's buying all those contracts. Someone's on the book trying buying that, right? Or if we're soaking, it's the same thing in reverse. We have a whole bunch of breakout buyers. So many people are going through the tape buying. The tape is speeding up and we're not moving. Someone's soaking all those contracts, right? So you could see that on the tape. If you're a traditional day trader and you find support and resistance, double bottoms on the daily chart or something, or whatever it may be, however you find your support and resistance, well, you could see, are they being supported? Are they being forms of resistance? Do we have sellers or buyers there? So it gives you extra confluence maybe with your additional reading, especially when you're newer and not using some of the more advanced trading topics. What else can we use the tape, order flow, footprint, whatever for? It helps us, as our other tools do, identify day types kind of before they've really happened. So what do I mean by that? Days that we chop all day, for those who don't know, that's called a balanced day. Days that it's just up all day or down all day, that's a trend. Hey, Theo. Sorry. That's the chocolate lab himself. So we could see, if on a larger time frame, if there's like a lot of trapped volume going into the end of a session, chances are that overnight session is going to trend, and then you have the likelihood, depending on context and whatnot, that you'll see a trend day the next day, or maybe you trap a whole bunch of volume going into the open, and then into the open you just continue to see trapping tape, and like that, you just know that pullback, I should be looking to be a bidder somewhere. So day types, we could see if an offer is super heavy. So maybe you're just looking for a long, maybe you're looking for a long in this area and you see the bid is super heavy, or the offer is super heavy rather, and you say, no, this isn't a tape I want to be long off. You wait until the tape looks right for you. Same thing in reverse, right? So it helps you stay out of trades when you shouldn't be in them. Gives you the patience to wait, right? A lot of people have that problem just day trading normally because they want to be active in a trade. They're just so anti click a button. But with the tape, it gives you a lot more confidence to just sit back because you don't see that buyer is active yet, or they're still not done accumulating a big enough position for you to want to be long with them or short with them. So yeah, it gives you much, much more confidence. And that's what goes back to taking out the subjectivity of, most day traders' approach. You could see exhaustion, or if you have an incomplete auction. So simply, to put this, if we look in this range right here, we see a lot of volume being transacted, right? 5,100, 4,600, 4,300, 1,300, you know what I mean, right? We have a lot of people who are willing to transact over here. This is a two-way auction. Buyers and sellers are happy to transact with one another here. Now what happens when we take a peek outside of this little range? We go from that 2,500, 37, 21, 25, 4,500 to 55 contracts being transacted, 155. That is exhaustion. And now simply, to put in simple terms, market auction theory, if no one else is willing to transact up here, price is going to go to where price knows there's a two-way auction. And that's why we see here. Now on April 20th, right, this is the tape from April 21st, but April 20th live, we saw a bidder at 38. Someone was happy to transact, very happy to soak as many contracts as they could in the 38s area and a little bit lower. No one else is willing to transact up here. Well, we know this participant. I know it's not just one participant. It's easier to say that. Same reason people say they. We know this participant deemed this a fair price yesterday. Let's see what they think today, right? And that was kind of the thesis for this trade. Now, this is a tape replay. I went back with the Discord group and I replayed this tape live and talked about what I actually look for. And we went, full in-depth tape reading. But if you want to see my real executions, they look pretty much identical to this. You could look at yesterday's video. I went over my live executions and how I traded this day. So we could see if there's exhaustion on the tape or if there's an on-complete auction, right? If we're still transacting a lot, people are happy to trade here. So if we're happy to trade here, we'll continue trading until we do a little price discovery. Nope, nobody, let's go, right? So that's very simple part of market auction theory, but hopefully that all makes sense. So I think that's everything I should go over on this video. If you guys want this to be a part 2, if there are questions people would like answered, or maybe I didn't explain something well enough, or whatever it may be, please leave a comment. And if we can get a few of them, if people do have enough questions, we'll have a part 2 that's kind of Q&A based. Maybe you guys want to see something particular, how it looks on the tape, or whatever it may be. So please comment, please like, please subscribe. And check out the rest of the videos on the channel.